heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, the U.S. it opens a formal investigation into those made-in-China chips used by Huawei. We'll have the latest on what it means for the U.S.-China relationship.
Plus, more on what China's iPhone ban means for Apple after the company saw $200 billion wiped off its market cap. We discuss with Mel Lagomasino of We Family Offices and Julie Ask from Forrester.
And we'll check the pulse of the IPO market. Arm, Instacart prepared to go public in the coming weeks. Brandon Lynch is from Equities Den with us.
Let's head out to D.C. and our reporter Dan Flatley. Dan, what we know is that the U.S. has opened an investigation into that 7-nanometer processor that was found inside the Huawei phone that Bloomberg did a teardown on. Which agency is looking at this, and what do we know?
Right. Yes, that's right, Ed. The Commerce Department is going to lead this probe, and we know that we got some news overnight that we were expecting for the last several days, which is that the U.S. is opening its official probe into what is actually in this phone. So it will probably be the Commerce Department's Office of Export Enforcement, which is going to look at this potentially in cooperation with some other federal agencies, maybe the FBI, maybe some other folks, to determine the provenance of this chip, how it was made, if they can determine that, and sort of try to figure out where we go from here.
Of course, it's the Commerce Department, Dan, that's been smarting by the timing of all of this. Gina Raimondo was in China when Huawei rather quietly unveiled this new product. Do we think that there might be a change to policy here?
It's certainly possible. I mean, if you look back at what the Biden administration has done on chips and semiconductors and these really important technical instruments and the export of these things to China, they've really tried to clamp down on some of the higher-end chips and some of the higher-end technology that's gone to China. And that's all part of a concerted effort. It has military dimension to it. It has an economic dimension to it. It kind of encompasses both. But it's really focused now on one phone or a couple of phones, and Apple has sort of gotten drawn into the mix here. We sort of have, the Star Wars fans will have heard of the Clone Wars. Well, these are sort of the phone wars, if I could be, somewhat flip about it there. But the truth of the matter is that this is kind of the apex or the focus of a lot of where the national security establishments, both in the U.S. and in China, are looking, because these chips have important implications beyond just commercial applications.
I think a Star Wars analogy is totally appropriate for this show. Dan Flatley, we thank you so much. Meanwhile, let's talk about the valuation implications, not just for Apple, but across the board. Very pleased to welcome Mel Lagomasino, We Family Offices CEO, and really someone who's been thinking a lot about the valuations, the outperformance of tech. But at this moment, is this yet another headwind, this geopolitical risk that we see, certainly for China-exposed tech names?
I think it's a tremendous risk. And I think that what's going on in China is that politics is going to trump economics. And I'm surprised it took them this long to actually ban the iPhones after what we've done to Huawei. And I think they timed it not just with Gina Raimondo's issue, but they also timed it right before Apple announces its new phone.
Timing is pretty impeccable on their start, and certainly from a media perspective, but from a buying perspective, from how this unfolds, are you expecting supply chains to be impacted? Are you worried and looking at Arm's exposure as they start to look to come to the market publicly, as we think about a Tesla that has a lot of focus on a Chinese consumer?
Right, and I think that there's two things. From the Chinese side, they have so many of the Chinese citizens working on all the supply chains for all these companies that I think that they have to be careful in terms of how all of these measures are put into place. But on the other hand, I think that it's important to recognize that China's political agenda is so strong and it's so important to the government that is going to trump every time, even the fact that it might hurt their own people as they really ban some of the uses of Western products. And I think actually that one of the most dangerous things is the anti-American feeling that could prop up because of this nationalistic push, and that means that people that are not in government offices, people that are not in state-owned enterprises, will actually start to not buy American products.
Mel, good to see you. Ed here in San Francisco.
Hey, good to see you, Ed.
As a technology investor, in the balance of risk, this was the year of the Fed and when we will end the rate cycle upwards, the year of AI. Now you have China. And how do you assess the balance of those risks? Which one do you apportion most worry to?
Well, I think China is a huge risk, but I think that the momentum of AI is going to be much greater and is going to have much more impact for investors. And I think some of the estimates are that AI is actually going to add $1.5 trillion of productivity to the economy over the next 10 years. And that's going to be huge. And so I think that, one of the things that's going on is that, and it's what's great about U.S. businesses is that they reinvent themselves. They figure out how to deal with these risks. I mean, there is already a tremendous amount of friendshoring going on. There's a tremendous amount of de-risking that's going on in terms of China. And so I would give more weight to AI than I would to China.
The guys over at JP Morgan have a note out and they say China's a headline risk, but they also point out it's a name that was trading at 27 times forward earnings. And so I wanted to ask how you kind of view the Fed as it relates to the technology sector right now.
Well, I think that it got a little ahead of itself, and actually we sold down on some of our tech stocks, some of our growth stocks, and actually invested in value stocks because I think the difference in the multiples are significant, and over time they tend to even out and balance. So for our investors, we suggested taking down some of the profits that they had in the tech stocks and actually rebalancing into value stocks.
Okay, so even as you talk about the productivity lift that AI will give, you were thinking take profits. Is there any area that is still yet to see the rampant rise and implication of AI?
Well, I think what's clear is that the companies that basically are dealing with the infrastructure of AI are going to keep on going. The question is how fast is the market valuing them ahead of their actual earnings? There's no question about what we don't know, and I think what's much more difficult is how is AI going to impact the regular businesses that we all do, and what is that going to mean in terms of our earnings, our productivity, et cetera? That's the harder picture.
It's very easy to just talk stocks, but you are diversified in your viewpoint and indeed in your asset class. When you're looking at growth versus value, are you thinking that across also the bond market as well? Are you thinking about in other types of ways in which you gain exposure to technology, not just in an equity basket?
Well, I think when we think about our investors, we think about overall returns, right? And overall returns over a long period of time. And I think what's really interesting is that now the fixed income market in corporates, very liquid, very high quality, you can get 6 or 7%. If you look at the long-term capital market expectations for the U.S. equity markets, it's about 7 to 8%. And you think about the volatility of the equity markets, I think fixed income, high-quality fixed income is actually a great opportunity right now for most investors.
Mel, every time you're on the show, we talk about the big names, Apple, Nvidia more recently, and then you surprise me with your top picks that are something a little bit different to what people are talking about. Which corners of the technology market specifically catch your eye right now?
Again, I think that all of the sort of the companies that are working on the infrastructure that's going to be required for AI, because I think that's the most obvious. The other ones are a lot less obvious.
Mel, next Tuesday I'll be down in Cupertino at Apple for their next iPhone event. Is that something that you watch? Do you sit there, watch the whole thing and think, my goodness, this is a big tech event, or it's not?
I don't personally watch it, but I read all the stuff, watch all the stuff that you report on it.
All right. Tune in then
curate
next
it for me.
Tuesday. Yeah, I will. All right, tune in next Tuesday. B-Tech on the ground in Cupertino. Mel Lagomasino of We Family Offices. Very good to see you. Thank you so much for your time. Now, coming up here on the show, highly anticipated IPO coming next week, Arm. We're going to get details on that, but also the current tech IPO landscape. That's next. This is Bloomberg Technology.
Sick of talk about IPOs yet? Nope. We have got a new name for you. Of course, it's back. Turo, a car-sharing business. It's restarted those plans that it had to go public, and it could list shares as early as this fall. That's all according to one key reporter who's joining us now, Bloomberg's Katie Roof. Just talk to us a little bit about Turo, the name, and why they might be analyzing the market right now.
Sure, and so Turo, this is a car sharing service. It competes with Getaround, which went public through a SPAC last year, and they're down over 90%. But Turo is still optimistic. What we hear from sources is they're hoping to do a roadshow as soon as October in order to debut this fall. I mean, they are one that has been trying to go public for a while. They did the rare move of revealing their finances early last year and then not going public right after because they realized the window had closed. And so we're hearing they see that the window is open and they're hoping that it will remain.
Interesting one. You look at Bloomberg's second measure data, Turo is the much bigger player in the US, Getaround the much smaller, but you referenced their SPAC listing. Since then, they've fallen to a market cap, Getaround, of 37.7 million. Be interested to see where Turo gets valued when it goes public. Bloomberg's Katie Roof, thank you very much. Let's stick with the IPO market and bring in Brianne Lynch, EquityZen's head of market insight. Brianne, Turo's the latest name on the flywheel of what's to come. I want to start with Arm, because how closely do you think the market looks at Arm, how it does, and then decides on the other IPOs that we think will come later?
Thanks for having me. I think the market is going to be looking very closely at Arm, regardless of the fact that it's not a great apples to apples comparison to some of these other companies. It's a company that was public, was taken private by SoftBank in 2016, and is now re-entering the market. So, you can't really apply that same, background to some of these other companies, but regardless, I think it will be a good measure of investor interest in tech and AI-related companies. As Mel was saying before, some of these companies that build the infrastructure around AI, that's really what Arm's bull case is, especially in a market where smartphone sales are down and the chip market has been a little stagnant.
Yeah, Brianne, just go in there with the bear case a minute, because it's also got significant exposure to China. Is that going to be something that we're hearing more and more if the IPO landscape is international in its flavor?
I think it is something we're going to be hearing, and we've seen that China is a bigger part of Arm's business in the past year than it was previously. When you couple that with the fact that their sales are down 1% year over year, their net income is half of what it was the prior year, that's not the rosiest picture. That is the bear case for the stock. So the investors that are investing in Arm and believe that there's upside here are really hinging that on their ability to own the AI chip market the way that they have in the smartphone chip market.
Brianne, based on what's happened so far in 2023, the few listings we have had, a quick serve restaurant, a dollar store, okay, call those growth names if you want, but do you get the sense that everyone wants a big IPO? The market's like, come on, give us the big tech IPO.
I do. And I think, there's certainly the institutional interest, but you have to remember too that retail investors typically have had no access to invest in these companies that have been private for 10, 15 years. These are brands and businesses that they know well. And until there's an IPO, that access isn't available. So I think in the broader market, there is a lot of demand for these IPOs just because, these tech companies are where a lot of the growth and innovation is happening. And while, platforms like EquityZen, we try to bring that access to more people, it's not until these companies go public that more investors can really participate in that growth. And I think there's a lot of demand for that, especially in a high rate market.
Yeah, and that was what caught our eye. SoFi underwriting particularly when it comes to the Instacart listing, for example. And therein lies a desire for retail investors and companies to bring that access to retail investors. Is that going to be a big source of purchasing for names that at least we know and we understand, rather than B2B Arm, a B2C like an Instacart?
I think Instacart really is one of those blockbuster names that checks all the boxes in terms of growth, profitability, and as you were saying, a brand and business model that investors across the spectrum understand. As a consumer brand, a lot of these potential investors use Instacart. They do their grocery shopping via Instacart, and I think there's a brand loyalty value there, which will also bolster investor interest.
Interesting, as they're trying to very much talk up their B2B kind of the business right now to bolster their growth story. Brianne, it's great to have some time with you. Thank you so much, Brianne Lynch of EquityZen.
Time for Talking Tech. First up, SpaceX has been ordered by the FAA to make fixes after its Starship rocket blew up. The FAA blamed multiple root causes of the flawed test launch and said the company needs to redesign its hardware to prevent leaks and fires. Plus, China's Ant Group has unveiled an artificial intelligence tool to use for wealth management and insurance services. The fintech company will use its financial LLM to power 2 applications which answers questions for customers and acts as an assistant for financial professionals. And some lawmakers are acting to curb the power of AI robot bosses in the workplace. This comes as companies rely on automated AI tools to measure workers' productivity and, in some instances, fire them if they don't meet performance thresholds. Caroline.
That future is coming thick and fast. Meanwhile, Ed, let's talk about AI a little bit more, but from the lens of who's powerful in it. Google's former CEO, Eric Schmidt, is one of them. Look, we know he's not been shy about his wealth. He's also not shy about his power. He's been leveraging his wealth, that $27 billion fortune, to actually build a pretty powerful influence machine that's allowed him to shape public policy. And sometimes some wonder whether it benefits industries in which he's deeply invested, like AI. We're going to bring in now Bloomberg's Anna Edgerton, who joins us more on really a deep dive in this. It's a fascinating read. And should we be surprised of overall Eric Schmidt's political influence? I mean, he was on the 2008 Obama campaign. He's someone who's always been deeply within technology, but also not afraid to lobby.
Yeah, that's a really good point. I mean, he has been a big presence here in Washington across 3 different presidential administrations. I mean, he was the chairman of the National Security Commission on AI, so clearly a very influential person. But what's different about this moment, this is when lawmakers are trying to not just regulate AI, but even understand what this technology is. And so whoever is trying to teach them that, as we will see next week when Eric Schmidt will join other tech CEOs and civil society people in the same room to explain to senators what AI is, much less how to regulate it. So this is a moment where this kind of influence machine that Schmidt has built over the years can really have an influence on this hugely important technology.
And pick apart some of that machine for us, because there's think tanks, for example, the Special Competitive Studies Project, there's the revolving door, there's what is there that he currently leads, and what undue influence does it have?
Yeah, just a few examples, and this is by no means a comprehensive list, but Schmidt himself has testified before Congress. He's been on these commissions, as we said, but he also has Schmidt Futures, which is an initiative to support scientists and entrepreneurs. Many of them go on to work in government, including the White House Office of Science and Technology. There's also his foundation that does its own philanthropic work, but is able to kind of further his worldview through that. And there's also the Special Competitive Studies Project, which is a think tank he founded basically to privatize his National Security Commission to kind of further his view of what AI is and what it should be.
Anna, final question here, and as a case study, what are you hearing in the halls of DC? I think Chuck Schumer spoke to us for this story.
He did. We hear that people very much appreciate Eric Schmidt's influence. They appreciate his contributions, but there are others who are worried about kind of his financial interests. And I did also, as we talk about this story, want to recognize our colleague Blake Schmidt, who worked with me on this story over the summer as he was battling cancer, and he passed away yesterday. So I appreciate his companionship, his collegiality, and his friendship, and he'll be greatly missed.
Bloomberg's Anna Edgerton. Our thoughts here at Bloomberg Technology, also with Blake's family. Thank you for yours and his reporting.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Let's get back to what's going on in that smartphone market. Just days after debuting the new Mate 60 Pro smartphone, Huawei announced an even more powerful phone in the lineup, the Mate 60 Pro Plus. Now the US government has officially begun this probe into the chips used in those devices. But what does it tell us about China standing on its own 2 feet, technologically speaking? Bloomberg Technology Executive Editor Tom Giles joins us now. And Tom, for me, that's the question. What are they able to do on their own, irrespective of how the West responds to it?
Yeah, I mean, this is the billion-dollar question, right, Ed? Because what the United States has been doing for years now is really trying to cripple China in its ability to create its own chip capabilities, its chip-making capabilities. Chips, as you know, are the engine. They are what make these electronics run. And a lot of the vital components come from the U.S. And so the United States has gone to great lengths over the last several years to bar any of these high-tech capabilities that come from the U.S. from landing in these devices in China. Gone to great lengths to do that. And what they're finding now is that as they look inside these devices, the United States wants to figure out, is China using U.S. capabilities through its own supply chain? That's the big question that they're trying to get answered right now.
So the small yard, high fence theory of blockading doesn't seem to have worked in this particular circumstance. Perhaps we've got to get into the nitty-gritty. Yep. But whatever the case, if we are seeing a capability of China to make these sorts of in-house, made-in-China chips, what next? What then? How much does that affect the overall tit-for-tat that's been happening, geopolitically speaking?
Yeah, absolutely. It shows that China's very much, when it comes to chip making, China is in catch-up mode. And the theory had been for many years that it's going to take them a long time. You know, building these fabs takes years, takes billions of dollars. And other parts of the world are so far ahead that theoretically it will still take China years. But what this suggests is that SMIC, in particular, this one particular Chinese chip maker whose equipment they have found inside the Huawei device is doing better than people had thought. You know, getting that chip down to 7 nanometers without getting into the smaller, generally speaking, the better. And that's pretty tiny, and it shows that they have some capabilities that theoretically it was going to take them longer to develop.
Throughout the period, for months now, we've seen various think tanks really try to highlight that, well, China's further ahead than many might expect. Tom Giles, we thank you for breaking all of that nuance down. But let's think about the implications for Apple in particular. We're pleased to welcome Forrester Research Principal Analyst Julie Ast, because all of this comes with such timing. Because not only was it all unveiled by Huawei rather subtly while Gina Raimondo, the Commerce Secretary, was in China, but also ahead of Apple's big unveil. Yes. So does it suck out any of the oxygen in the room when it comes to Apple's lineup that we're about to be getting?
I don't think so. I mean, certainly the Chinese market is very important to Apple. It's almost 20% of their sales. The emerging markets like India and China are very important to Apple as we look forward. But next week is still going to be an exciting time.
Overall, in terms of the new phones we're getting, the AirPods, we want to dig into that in a little bit moment. But I know the precise specifics around China and India are not always your forte, but to the extent that we're worried about supply chain impact, or indeed just more broadly a pushback of not just government users, but actually just consumers in China. We've seen it before in 2019 and Apple weathered it. So is it that much of a worry?
Well, I think it's hard to say what the future's going to bring, so I think it's always going to be a worry, but it's also hard, given the amount of Apple supply chain that's based in China. It's really hard to untangle those. Like Apple's a large it's a large employer in China. It's got a very big base of business, and there's a lot that Apple does to help the Chinese economy as well. So I think it's going to be something to watch and see how much of an impact it has and what happens over the long term as well.
Julie, it's really hard to tie all these stories together, but next week we get iPhone 15. A 15, a 15 Plus, a Pro, and a Pro Max is what we've reported at Bloomberg. What does Forrester know about the Chinese consumer? If we get the tech upgrades we think on that handset, is that something that the market in China traditionally responds to?
So the answer is yes, and I think there's a couple parts of the answer to this question. So when Apple unveils its phones next week, we do expect it's going to be the best hardware that's on the market. It's going to have new camera features. It's going, what consumers focus on, right, is the camera, the size, the quality of the screen, right? Because a lot of what we do with our phones is consume media. We watch TV, we listen to music, we read the news and do more things like that. And we also take a lot of pictures and post on social media and share with our friends. So those are the things that consumers will be focused on. And yes, we do expect Apple to leapfrog the existing competition that's in the market. The other side of the story, though, is, Apple's got an entire ecosystem of services and media and health and payments built around their devices. So there's a portion of the value that you get derived from just owning the smartphone, but there's so much more to the Apple's value proposition to an individual consumer than just the hardware itself. And there is no one in the Android ecosystem that's been able to rival that to date.
Well, let's go to some of the specifics then. Shout out Bloomberg's Mark Gurman, who has the Everything Apple plans to announce at September 12 iPhone event story out this morning. For me, I'm super interested in the latest processor, A17 3 nanometer, but it sounds like you're also focused on design. We know about these titanium sides, the refined and expanded bezels. What do you think is most important?
Yeah, so I think for the consumer, certainly I think it's hard to put, or it's hard to articulate what it's like with the look and the feel and when somebody has it in their hands. But that's one of the things that Apple has always done well, is when somebody touches that device and they have it in the hands for the first time, it has an unbelievable wow factor. But if I go back to what you said earlier just about the chips too, the other advantage that Apple has is it has such a vertically integrated stack in their devices that everything is like fast. It's contextually relevant, things run smoothly, and there's so much that they do that, like I said, it's hard to articulate, but people, whether it's just the hardware or even how their applications are working, people just have a wow factor when they have one of those phones in their hands.
Apart from Siri, I'd say, to a large extent. And I think there's sort of been the void that Apple hasn't yet really stepped into, artificial intelligence.
Right.
Like, are we going to get any drip feed of really what's going on? Because they've been beefing up their team and they've been spending millions per day.
Yeah, so I think there's artificial intelligence, right? It has a lot of flavors, right? So there's like kind of the simple stuff that fills in the blank and does spell check and creates memory for us with our photos, and those things are fun. Certainly, I'd like to be able to tell Siri to call my husband and have that work. They don't know his name. So some of those things will happen. But then I think if you're talking about things like generative AI, I think we're going to wait a little while on that, right? I think there's probably too many risks associated with putting those applications directly in front of consumers yet, whether it's the mistakes that it makes or the hallucinations or the biases that are in it. I think we're going to wait on that for now.
All right, Forrester Research Principal Analyst Julie S., thank you so much. We're looking forward to taking B-Tech on the road to Cupertino next week. Now, coming up on today's program, we'll get all the details of the Y Combinator Summer 2023 batch with the CEO of Y Combinator, Gary Tan. He's here in SF, and that's coming up next. This is Bloomberg Technology. So it's been a really big week for a new crop of startups and founders here in San Francisco. In the last 24 hours, around 230 of them pitched investors in a demo day as part of the latest Summer Class 2023 at Y Combinator, the accelerator. The aim, go through the process for a few months, get your startup on the map, and then raise some money. And delighted to say that Y Combinator CEO Gary Tan is fresh here in the studio in San Francisco. Those days are important. Basically, you put those 230 or so founders in front of investors, having had weeks of training and mentorship so they can raise money. How did it go?
Oh, it went great. There are thousands of people logged in to demo day, and it's still online, but the batch itself was 100% in person, and the feeling was electric.
We're going to ask about the benefit of that. There's something I want to clarify with you, Gary Tan. So when you were on the show last time in June, 35% of those you selected were pure play AI, and about 50% AI adjacent. Absolutely. But if I do the math, more of them appear to have become sort of AI associated. What does that reflect?
I think that's where a lot of the crazy opportunity is fundamentally. It's basically a brand new paradigm of computing where the computers can actually reason now. And that means literally a brand new wave, a brand new revolution. And these are companies now that realize that during the batch, they can close contracts for tens or hundreds of thousands of dollars with Fortune 1000s because the demos are that good. And if you can do that, that is the greatest rocket booster you could have for 2 or 3 people who are really great software engineers who can build fantastic AI software.
Gary, what about the rocket booster that is San Francisco? You bring international founders. You bring advisors internationally. I'm just looking at a UK pinup, Tom Blomfield, coming in as one of your newest group partners. But very much it feels like San Francisco is back on this map because of artificial intelligence. Is that real? Is that something that narrative media has grabbed hold of? Why come to SF to build your AI Y Combinator?
Well, at Y Combinator, we really believe that there are true agglomeration effects around having people right next to you, right down the street. The thing about YC is that about 5% or more of the companies that we fund go on to be worth $1 billion or more. And the secret there is 2 things. One is obviously we're a 12-week program that speeds people up, but for the life of the company, there are literally 4,000 other companies that we funded over the last 18 years, and they all help each other. And some crazy percentage, about a third of them, all end up in San Francisco or in the San Francisco Bay Area. And if you look at the capital effects, it's still the best venture capitalists in the world. They're focused on the Bay Area, and I think that is just going to continue to be true. And even if companies aren't in the Bay Area, every single CEO that you could think of will make a run through Sand Hill and San Francisco to raise money.
The one thing that San Francisco arguably lacks is diversity. And I know it's something that's close to your heart, Gary, and I look at some of the numbers here. 16% Asian demographics in terms of 2023 batch, but only 2% black when the population in America is far more than 2%, 13%, 3% Hispanic or Latino, and there's about 10% of the founders are women. How are you trying to increase that ultimately in a fairer manner?
Well, YC is going to continue to do more outreach and more efforts for diversity. It's really important at the end of the day to have representation at sort of all the levels. And so, we know that there's a lot of work to continue to do there, and that's why we release those numbers. And I think that we play an important part in that.
Gary, there are many notable names that started with YC and have gone on to be publicly traded or very high valuation growth private companies. But of the 229 you funded, realistically, how many will go on to survive? What is that kind of attrition rate?
Well, so the wild thing that I've been spending time looking at the numbers, and it turns out about 55% of companies that went through the program back in 2016 actually went on to raise a Series A. And so that number for people in venture capital and in startups is actually pretty remarkable. And then the more remarkable stat I found was that about a quarter of those raised at year 5 or later. And so this runs exactly counter to the narrative that is out there for startups, where a lot of investors are basically focused on trying to find the shot out of a cannon. They call it the blue flame. And I think that sort of runs counter to what I really believe, which is finding really great builders and then giving them the tools to succeed. It takes a long time. It's the 10-year overnight success.
There are many ways that a venture capitalist can exit an investment, a listing or a merger or an acquisition. The IPO market seems to be hotting up. You have many investments that you were the very first investor in by virtue of the accelerator. Just give me your view on this IPO market that seems around the corner.
Well, I guess I really underestimated the past sort of 3 or 4 years to what degree our markets are in the end influenced by interest rates. And so, if anything, that makes me more and more glad that I'm way at the beginning of it. I think of the public markets being connected to the early stage markets sort of by a rope. And, this might be up, this might be down, but on the flip side, new innovation is completely disconnected to the decisions that the Fed is making. And that's very much a good thing for us, I think.
There's plenty that affects these public markets. In particular, we're thinking of China and the exposure there as well, Gary. What's interesting is that there's one name that's very associated with the US, and it's Instacart. And I know that's something that you wrote early check into, been an advisor to. How much are you seeing at the moment this optimism come back that companies, even though they might have to swallow a bitter pill of valuations not being where they were in 2021, but ultimately being able to stand on their own 2 feet, become public, and have a great growth story?
I think that was one of the really big lessons for startups broadly, and I'm hearing it in my office hours at Y Combinator pretty regularly. There was this wrong idea that sort of permeated Silicon Valley and venture-funded startups, where you wanted to sort of show metrics to raise the next round, and a lot of people forgot, hey, profitability, gross margin, and ultimately net cash flow. That's what ultimately really, really matters. And actually, it's incredibly healthy that Instacart has that story. So many more that are going to IPO have that story. And it's a return to basics, not just at YC, but for all of tech.
Back to maths. We thank you so much for spending some time with us after what has been a very busy time over at Y Combinator. It's CEO Gary Tan. Great to have you in the house. Thank you. Now, you're probably waiting with bated breath for Apple's reveal. It's coming of the iPhone 15 as soon as next week. You don't need to wait with bated breath because we've got all the information for you from one Mark Gurman. He always gets the scoops ahead of it. He is, of course, looking ahead to the Wonderlust event. Just how wonderful is this going to be, Mark?
Well, if you're in the market for a new iPhone, Apple Watch, or AirPods, it's going to be pretty wonderful. They're going to be rolling out 4 new iPhone models as they've done the last few years. This is going to be a very significant launch for them. This is the first so-called iPhone redesign in 3 generations. So the iPhone 15 Pro and Pro Max will be redesigned with titanium, new cameras, a new overall shape, a new charger. So that's significant. The Apple Watch, if you bought last year's Apple Watches or even the ones from the year before, there's probably no reason to upgrade, but they will be getting a performance boost. And they're also going to start bringing USB-C, which is the new charging standard they're moving to on the iPhone and their other products because of the European Union, to the AirPods.
There's a lot of detail in your preview out this morning, Mark. I want to go to kind of the tech side first. A17 processor and in the Pro models, and then the U2 on the RF side across the 4 new iPhone 15s. How does that improve them?
Yeah, so they're continuing the strategy that they actually started a year ago, where they're differentiating which chips are in which iPhones. So if you want the fastest new chip technology, you have to get the higher-end iPhones. The iPhone 15 and 15 Plus, the 2 baseline phones, are going to be getting last year's Pro chip. So only the pros will get this A17 chip. And there is a focus there on both performance, but also efficiency for battery life. Now, this new U2 chip, this is their 2nd generation ultra wideband chip. This is a bit of a surprise because they have not put in a new ultra wideband chip into its product since 2019 with the iPhone 11 Pro. Now, this chip is all about accuracy. So being able to find your devices more quickly, but also to more accurately locate people on the map in the Find My application. So this is a significant new chip. This is going to be found across all of Apple's major new products, and it's going to first roll out in these new iPhone models as well as the new Apple Watches.
As long as it can make sure that I'm by the right lift bike at the right time, I'm pleased with that as well. Mark Gurman, absolutely brilliant. Ahead of the all-important September the 12th event that, of course, one at Ludlow you're going to be at. And of course, as we head to break, this is the end of this week of Bloomberg Technology, but so much to be looking forward to next week. Just, are you going to be looking at the watch? Is it the software? Is it the hardware? I know you're going to be geeking out on the chips.
Yeah, look, we didn't even get to the updates coming to Watch or AirPods, but after the news flow of this week, iPhone is everything. What an astonishing news flow that's put that in focus.
Yeah, so right, particularly what they say around, we know these things are pre-recorded, but what about China? What about the exposure there? This has just been an extraordinary time, particularly with the Huawei unveil. But for now, that does it for this edition of Bloomberg Technology.
Recap the week and the show on the podcast, wherever you get yours, Apple, Spotify, iHeart, and Bloomberg. From SF in New York, this is Bloomberg Technology.